Hey, good afternoon. Welcome into the Wednesday, November 4th edition of Market Talk. It is November 4th, 2020. I'm your host, Jesse Allen. Great to have you here on the program today. It is brought to you by our friends at Boa Coolers. Boa Coolers, I love these things. They are awesome. It is a family-owned company, and I tell you what, no more bulky, heavy coolers to deal with. This thing is as light as your gym bag, all right? And it keeps your drinks, your food, whatever the case may be, it keeps it cold, it keeps it fresh. Great colors. You can take them out easily with you if you're going kayaking, if you're going on the golf course, whatever the case may be. For our farmers out there, harvest season, I know we're wrapping that up, but you spend those long hours in the combine, in the tractor, in the semi. Take this with you on the go. Boa coolers, they're fantastic. Again, I said 4 great colors. I have the lime green one. They're awesome. BoaCoolers.com. That is BoaCoolers.com, BOA Coolers.com. Tell them Jesse at Market Talk sent you, and you can get yourself hooked up with a great product that is Boa Coolers. All right, our guest here on the program today, he is with Global Commodity Analytics. Mike Zuzolo joins us here on Market Talk. And Mike, great to have you on the program.
Thanks for having me, Jesse.
Mike, let's jump right in. Looking at this market today, kind of surprising, maybe. Obviously, we have a presidential election. We don't know the full results yet. A lot of states still counting ballots, and markets today, the soybean market especially, 19 to 20 some cents higher in soybeans, meal, oil, both higher. I'm curious, what are you seeing in this market today? What was with the higher gains despite all the uncertainty with the election?
Yeah, I think it was surprising. I think the big thing that we're going to have to wait for is follow through. I think that's where you're going to get days like this. I think what happened specifically the post-election time period was the bear tried to test the downside. We hit a 3-week low in the copper. The dollar hit a 100-day moving average resistance. It's the second time this week it's tried to go up and get a buy signal and then watch the technicals turn on for it. And that typically what happens, I think, Jesse, is the funds will come in and take on a long position when you get a technical buy signal, especially when you get something like a double bottom and a moving average that you clear on a closing basis. And so I think the bear came in and tested the waters to the downside. But the equities markets just would not have any of that. And I really think that between the equities and the weather models in South America, you had a very strong risk on trade with the soybeans leading, the meal leading. One of the things we've kind of gotten used to in this past 6 or 7 months is what I call a pork and bean trade, where the Chinese demand comes in and all of a sudden you see both beans and hogs go up together, or you see a pretty weak export sales number and the beans and hogs tend to go down together. So you've got a similarity in trading pattern here where the copper and the wheat tend to trade together and the hogs and the soybeans tend to trade together. That's still intact. And so it kind of was a rising tide lifting all boats today. I am nervous because I'll put it to you this way, as a medium-term analyst who works with farmers and ranchers and doesn't do a lot of speculating at all. I think the big thing that I was going into the election with was, okay, there's 3 big things hitting us right now in the markets other than weather. On the macro side, there's the stimulus, there's the COVID, and then there's the election. And depending on how long this goes out, you got to start wondering, how long will it take for the next stimulus bill to get passed? Because we won't have a new administration to lead that forward. The other thing goes back to, if there's no stimulus and COVID continues to get worse in terms of hospitalizations, and that's what I really look at, is hospitalizations, and we're breaking towards 50,000 a day now, that tells me that maybe the consumption side of the economy is not going to be there during the holidays, and it opens up the pathway and the doorway to another springtime, maybe not as severe as far as market break or market weakness, but it's still an issue for me. And that's one of the things I've been talking a lot about today with the producers and ranchers I work with. Let's not get comfortable on this one-day wonder, as I would call it. I hope it continues, because it should if the weather stays bad in South America. But I'll still price and hedge into it as we hit some technical resistance.
Sure. And, it's great you mentioned that, don't get caught on this kind of one-day wonder. I've heard from some producers this week that are kind of saying, hey, I'm not doing any marketing this week. They're worried about the election. They're worried about COVID, but yet you see a big run up in soybeans here, and you have to wonder if there's some producers looking at this, if there's some room for profit taking for their operation. I mean, is this a day that's hard to ignore, or again, should they kind of wait, like you said?
No, I really think it is, because one of the things that maybe helped us today was the residual impact of the IHS market yield numbers that came out yesterday. They lowered their corn yield down to about 176 roughly, and they took us down to about a 14.5 billion bushel production number. We didn't really trade that at all before the election. And I think maybe we swung back around and that got traded because that lower corn number, especially in that lower bean number as well, has magnification to it if you got weather problems down in South America. So we're going into a WASDE report is my overall point to answering your question. When you get near $11 beans and you go into a WASDE report and you've been rallying for 3.5 months straight, why wouldn't you be a put buyer and putting some floors underneath you, especially if you've got a contested U.S. presidential election and COVID starting to re-enter the scene in terms of lost demand? And I have been separating out a little bit more between the grain markets and the livestock markets. I'm much more worried about the livestock and the meat markets if COVID resurrects itself and we see another tighter lockdown come forward here as we get right smack dab into the holidays. So I'm going to be more eager to hedge my fat cattle and my hogs, maybe not as much on the feeders since they just got done making a very big low. But maybe I can give the grains a little bit more room to maneuver. But again, puts right now, especially short dated puts that are like a January bean put or a March corn put, they've really come down in value because we've eroded some time and the markets have been elevated for quite some time as well. So I think they're good risk reward. At least take a look at them and make a determination for your farm or ranch, because I think that's what you're kind of alluding to is why would you turn away from this when you have such uncertainty in this market?
Yeah, and that's a great point there, Mike. Let's talk corn a little bit. Not as big of a jump today as a soybean market, but a little bit of bullish influence there, kind of absorbed. And we look at that corn market, and you mentioned maybe some puts out to maybe that March contract sitting 411 and a quarter. We're kind of breaking through some of that resistance it seemed there on the corn side. What are your thoughts on this corn market right now?
Yeah, you bring up a good point, because you're getting up to the point now where if you can have a firm weekly close, you may be able to go up and test those old highs. And that's, if you could do that before the WASDE report, I think looking at a March $4 put would be probably a good idea. My thoughts on the corn market is it's the best opportunity to go higher from a global perspective. In fact, one of the big major private estimates came out from Reuters and Landworth, Refinitiv. They've changed their names a lot, kind of like IHS has. But they came out and they cut their Argentine production down below 45 million tons. I'm right at 45 million tons for Argentina. I'm ready to go lower if we can't get any rains in the next 2 or 3 weeks, because the Argentine planting window essentially ends for corn by the second week of November. So they're planting, but they're planting in the dust right now in Argentina. But if they don't get any more rains after by the middle of November, then they're going to really start thinking about heat and drought and corn not, being able to pollinate. So I think that number coming down to 44.5 by Refinitiv, that puts you against a USDA number of 50 million tons. We know Ukraine is suffering. They're not up to snuff in terms of exports year to date on their corn like last year. So I'm much more friendly to corn, and that's why I'm only putting a basic put in place and not selling cash. I'd like to see that basis get a little bit better in some areas, and I'd like to see the futures market, see if it can run. The key with the corn has always been the wheat. And I think we're waiting on the wheat if we're a corn trader right now. If we're a corn bull, we're probably waiting on the wheat to make that next leg up. And that's probably likely given the weather pattern in the hard red wheat belt. I'd look for hard red wheat to maybe spur the soft red wheat, and then that in turn come over and help the corn out.
And that was my next question, was going to be on this wheat market. And we've been seeing these weather challenges, and that's kind of a wait and see thing right now, it seems, Mike.
Yeah.
everything with the wheat
Yeah,
market.
and then I've got a couple producers down by Wichita and out west towards Hays, Kansas, in the hard red wheat belt. Where I'm at in northeast Kansas is right on the Missouri River, so I'm still corn and bean country. There's some soft red wheat, some hard red wheat, but it's mainly corn and beans because the yields are still very, very good in this part of the country. But as you go west and southwest, Jesse, they're telling me it could be the worst crop in a couple, 3 generations. And that's on some of the lowest acreage base in a couple, 3 generations. So I would not be at all surprised, given the price of milo or sorghum that we're facing out here. It's in some cases 50 cents premium to cash corn. I would not be surprised at all next spring to see wheat torn up. Because it's so dry. And if we don't get any rains before we go into dormancy here shortly, it's going to be a really tough winter without a snow blanket. So I think we're there between what's going on in Russia and the Ukraine and the United States and Argentina. We've got enough problems that a bigger Australian wheat crop and maybe a bigger than expected Canadian wheat crop still is going to have to be used up by some of these other countries that don't have it, including us.
Let's talk livestock, Mike. Cattle side first. It seemed like the market kind of tiptoed into the day here on Wednesday, and then by the close, finished up nicely. And you got to factor in obviously corn with feed costs and everything right now. But this cattle market, the lives that 110, 115 range, feeder cattle 130s. What are your thoughts on this cattle market? I myself seem to be a little bit cautiously optimistic here.
Yeah, I think I can be on the feeders because January feeders went down in the mid-low 120s not too long ago, and it seemed like they made a real hard bottom, found a lot of short covering, and we got to remember the funds are record net short in managed money positions for the feeder cattle. So I think that's where the Wednesday trade came in. Not only did we have the hogs turn on with the soybeans in that fund-driven trade, we saw the feeders really kick it into gear. And I think that was also fund short covering. So cattle played nicely with those two. Unfortunately, fat cattle can't get a bid in the country right now. I'm hearing 105 is the top end right now. I need better than that when I see December fat cattle at 108. And we're, like you say, we're trading 110 in some instances in some contracts. This is not the time of year. And with COVID starting to spike again, this is not the time and place for the fat cattle to show weakness, especially seasonally, because they should be going higher. We were about $12 on cash steers higher at this point last year than we are right now. So I really want the cash to move. The Fed Cattle Exchange didn't do that for me today. It was all heifers that sold, and they were bid nicely at 106, and there's some purchased at 106 plus. But I want some cash steer trade, and I want it in good volume because those slaughter numbers from last week still bother me and make me think that the hogs are winning the game when it comes to the featuring in the retail space. So I'm a little nervous about the fat cattle. Wouldn't be if the hogs and feeders kept going up because I think they'll play nicely with those two.
Yeah, and like you mentioned, just can't get a bid in the country right now. I mean, today's Fed Cattle Exchange, pretty quiet. I mean, really,
Yeah.
it's been tough sledding there on the country. That's a great point. Let's switch to hogs. You kind of mentioned, obviously, alluded to hogs there a little bit, talk about cattle. Good run up with the soybean market today, and we're sitting in a pretty good spot, heading into this fourth quarter or well into this fourth quarter. It seems like hogs are in a decent spot right now, but again, COVID concerns, demand maybe for the holidays, I'm sure that's going to be a factor.
Yeah, if you could take that away, Jesse, I think there's a $5 or $7 more upside in those hogs because of the way not only the chart looks after that December contract made that low a couple days ago. That's my go no go gauge. By the way, if you take out that low from Monday, I'd start worrying about getting hedges in place, whether it's COVID or whatever. Just get some puts bought, like we were talking about earlier. But other than that, the pork cutout and the fact that the technicals are in good shape. Would suggest to me we can go another $5 to $7 higher here. Seasonals are on our side heading into Christmas, but I would say $5 to $7 higher. Start shopping around for getting some floors in place. It was interesting. Right before we went on the air, I talked to a client back in Indiana who had just talked to a friend who has a lot of genetics and pigs over in China. And what we're hearing continues to be the case, and that is African swine fever is not going away in China. They're able to take care of it better if you go way far out west and where there's no transportation or infrastructure. And so that begs the question, how are you going to feed those hogs? So it's still an issue. And so I think the import game is still very much alive and kicking when it comes to the pork side of the equation in 2021 for China, unless they pull something politically and punish us through the commodities and through the agriculture trade, which is something that I really am looking at in 2021. That's something that's got the hair on my back up, so to speak, because I'm always nervous about a shift. If we had a shift in administration, whether the Chinese would have a different tact with us politically.
Yeah, and that's a great point you mentioned about China. And we can kind of talk a little bit about that here briefly. Just the fact that, China's been importing corn, beans, pork, beef, even from the U.S. in some respects. But it just seems like, we've been seeing some good, exports to China. But when's that buck going to stop? And I think that might have some producers kind of concerned right now.
Yeah, I would play it very simply at this point. If the weather pattern changes and you're a producer who's got a lot of sales on the books, you're in pretty good shape. If you're a producer who doesn't have a lot of sales on the books, assume that weather pattern change is not only going to kick the funds out of the market, but it could also raise the specter of China wanting to start to cancel. As long as there's weather in South America that's cutting the bean and corn crop, it's very unlikely they're going to cancel anything in China, because that positive feedback loop, if they see less supply, Mexico sees less supply, China sees less supply, and all of a sudden they're buying extra. They're buying forward like they have been. I suspect China and Mexico and some of these other countries that have been really on the buy list lately probably are buying out into January right now, would be my guess. So they could keep doing that if we stayed hot and dry in South America and very cold and dry in our hard red wheat belt. So it's not an issue as long as the weather stays on our side, kind of like the funds.
Yeah. And I've talked to some producers back home in Iowa, and I know some of them, overall, like you mentioned, if you got a lot of sales on the books, probably in good shape. Some of these guys I've talked to and gals, they're just saying, we're going to store corn, we're going to store beans and whatnot. And it makes a guy wonder if, again, kind of going back to our overall theme, it seems today, taking advantage of some opportunities if it makes sense for you.
Yeah, and real briefly, I think you make a huge point, because I started in 1995, so I've been in this for over 25 years, and I was really into cycles back before the funds came on board, and the currencies and the macro conditions and factors really weighed on us and drove our price trends. I think a lot of producers I come across today are still in the mindset of waiting for a cycle, and we've been hit bad since 2013 in the grain markets. We want our money back. We don't want to sell on a cycle low. This could be 3 to 5 years of good markets. I would only caution you with the idea that it wasn't long ago we went negative in crude oil prices and ethanol took a major hit. That could happen again because we're in a pandemic, and we could easily switch over to an oversupply in the funds' eyes, and they could really hit our prices for a time. So that's what I'm kind of trying to weave in between is I think cycles are on your side in the agriculture sector right now. That reflation trade has come back in, but the funds are the ones who reflated us. So we got to keep that in mind.
Yeah, a lot of things to consider, a lot of things to watch. Mike, any other final thoughts here before we wrap up market talk here for Wednesday?
I try and look at 2 or 3 things, Jesse, about what would be triggers to maybe pull the funds out or create an environment where whether you're on your own and weather's the only thing hanging on to keep you going higher. And I think we're kind of at that stage right now as we go through this election maze. And thanks for having me otherwise.
Yeah, I appreciate the time as always. And if folks want to reach out to you, if they need some marketing advice, need some help, how can they do that, Mike?
Best way is to go to the website, globalcomresearch.com. That's globalcom with 2 M's. If you need to talk, call me toll free after the market closes, 866-471-2588.
Well, Mike, it's been a pleasure, and I know we'll have you on again next week. Still working on the day, but we'll figure that out. So I appreciate it very much, and we'll talk to you soon.
You bet, Jesse. Thank you.
Mike Zuzolo with Global Commodity Analytics joining us here today on Market Talk. Coming up tomorrow on the program, John Heinberg from Total Farm Marketing by Stuart Peterson will join us as we continue to hopefully we know who our president is by tomorrow, but we may not. We'll have to see. And we'll have information on the markets coming up for you tomorrow as well here on Market Talk. You can learn more, markettalkag.com. Find us on Facebook, Twitter, Instagram as well, and all your favorite podcast sources, including Spotify, Apple Podcasts, radio.com, Amazon, and Audible, and on YouTube. This has been the Wednesday, November 4th edition, 2020 of Market Talk. I'm your host, Jesse Allen. Have a great afternoon.